Hey, what is going on, my friends, and welcome back to another video on the channel. Well, as you can tell from the title, this video is going to be a little bit different as we will be talking about HCMC again, but it's going to be a bit of a different video than usual. Now, this has been easily the biggest, company and stock on my channel. I mean, if you just look at the views, they have been absolutely insane. You guys absolutely love this company. Over 8,000 views today. We had about, let's see, which was it? 11,000 views 2 days ago, 14,000 views 3 days ago. You guys absolutely love HCMC, and I know many of you on my channel do invest into them, so I try to keep you all as up to date as possible. Well, the thing about that is, though, is I have made so many different videos about this company, talking about so many different little aspects, that it has become a lot. It's a lot to be able to go through and watch each and every one of these. I mean, this is probably a few hours worth of content to really see what this company is all about and what all of this information is. Now, one of you did come to me and gave me an idea where you said, Tyler, why don't you take a company, if you talk about them so much, and you make so many different videos, at the end of it, maybe a few weeks after you post all of these videos, go ahead and make a bit of a compilation, talk about all of the different things you talked about in your other videos, but summarize it. Do a review, basically put all of this information in one accessible place to make it easier for, new people to this stock, or people who just discover HCMC, who don't want to necessarily watch 8 or 9 different videos that talk about many different topics. I think that's a fantastic idea, and that is what today's video is going to be about. Now, if you do want to go ahead and jump through the video to see different parts, I will be putting timestamps down below. I don't do it too often, but I know this will be a little bit of a longer video, and I do want to make sure that you guys can get the information that you are looking for. Now, if you do want access to all of this information early, if you want access to my trades, my trade portfolio, and to stay as up to date as possible about HCMC and all of your favorite stocks, definitely consider going down to the link in my description. It will bring you over to my Patreon, and that is where I'm fully transparent about every single trade I make, and they get early access to loads of information. Lastly, if you are looking to start your own investment journey, or if you are looking to expand out to a new brokerage, I highly suggest Webull. This is an affiliate of mine, so if you do use the link in my description, you can get 2 free stocks valued all the way up to $1,850. This company has been recently adding some OTC stocks like GAXY and ABML, and they have really been expanding out to other things such as crypto and really growing their platform, and I'm very excited about what the future holds for this company, so I would definitely check that out as well. Now, a few things that I did want to take notice of in this before we get this big video started is just a few of the winners from my Patreon, as these people have been absolutely going crazy over HCMC. This guy alone is up nearly $6,740. That's 285%. Absolutely insane. This man invested about $3,000 roughly, a little bit, maybe like $2,500, and he's made 285% on that, putting that investment up to about $9,000. Absolutely phenomenal. Another member of my Patreon is up 172%, up $1,059. He only invested about $600, and he is up huge. So it really does go on and on. So again, if you do want in on some of these big gains, definitely consider going down to the link in the description, as it will bring you to my Patreon. Now, with that being said, let's go ahead and let's jump straight into this information, and I want to talk to you all about how I plan on structuring this video out. So what I'm going to do is I'm going to talk firstly about all of the big catalysts that I've been seeing, all of the good things, and some of the more positive things that we have talked about in the past. I'll say about the last 5 or 6 videos have been about positive things, and so I want to go over what a few of those are. Again, I will be briefly talking about each one. I don't want to go too far in depth, as I do have full-blown videos about them if you do want that, that deeper analysis and that deeper information. So definitely head there. But what we're going to do again is we're going to jump into a few catalysts, jump into a few good things that I think this company has going for them. Then we'll jump into some risks, and then we'll jump into an overall conclusion. So the very first thing that we will have to talk about whenever it comes to this company is going to be their subsidiaries that they do own, which are going to be the vape stores. Now, I'm not going to talk too much about what these subsidiaries are and who they are and what they do, as that, again, that is information that is accessible throughout many of my past videos. But basically, they do have 9 vape stores in which they own throughout the southeast of the United States, and that is going to be some of, a very large piece of their revenue. Now, one thing that I do believe is going to be beneficial going on into the future here is the fact that the industry in which one of their main subsidiaries operates in is growing substantially. Now, here we do have it. It says that the global vaporizers, e-cigarettes, and other electronic nicotine delivery systems, or ENDS, the market is expected to grow from $11 billion in 2019 to $12.6 billion in 2020 at a CAGR of 13%. Now, the consumption pattern in e-cigarettes market has been rapidly shifting due to the blank-19 outbreak. The majority of the consumers intended to either maintaining or increasing their purchase of e-cigarettes. Now, this is where it gets interesting. The market is then expected to recover at a growth at a CAGR of 25% from 2021 and reach $24 billion by 2023. That is some substantial growth, and the fact that their subsidiaries do operate within this industry is a major plus, as that means that their overall consumer base is going to be improving dramatically. Now, we did also highlight that North America was one of the largest regions that does sell within this industry, and so again, that is a plus, as that does also allow them to have a higher potential consumer base. Next up, we are going to be taking a look at the fact that the global health and wellness foods industry is growing at rapid rates as well. Now, the reason I think this is important is because if we look back at what some of their subsidiaries are, they also own 4 overall health markets that are going to be operating within the global health and wellness food market. Now, according to reportlinker.com, they did release an article that says that this is going to reach 1 trillion by 2027 when referring to the global health and wellness foods industry. This is a growth at a compound annual growth rate of 4.8% over the analysis period of 2020 to 2027, so basically the next 6 years. Naturally, health food, one of the segments analyzed in the report, is projected to grow at a 5% CAGR to reach 364 billion by the end of the analysis period. After an early analysis of the business implications of the pandemic and its induced economic crisis, growth in the functional food segment is readjusted to revise 4.9% CAGR over the next 7-year period. This segment currently accounts for 29% share of the global health and wellness food market. So that is absolutely huge. That means not only is there, one of their main subsidiaries with all of their vape stores, that means not only is this one growing at insane rates, potentially reaching 24 billion in 2023. Now, their other subsidiary is projected to reach 364 billion. That industry is, expected to reach 364 billion by the end of 2027. So these are obviously very large catalysts for this company, not only in the short term, but going in the long term too, because we do have to consider a lot of people are very excited about this lawsuit, but the lawsuit is not the only thing that this company has going for them, and I don't think people realize that. I don't think they realize that this is not just a company that is made around a lawsuit that will disappear after the lawsuit's over. No, this is a company with prospects. This is a company with potential and a good management team, and they are within an industry, 2 industries at that are growing at very, very fast rates, and I think this is going to be absolutely fantastic for the company. Now, the next thing that we did highlight in the very last video is the fact that Philip Morris is continuously growing the products in which they are being sued over. So just a brief reminder, we do have to remember that HCMC is going to be suing Philip Morris because they believe that Philip Morris has infringed on their patents. Now, one thing that we do want to take a look at is the fact that they are suing them over a patent that is associated with Philip Morris's IQOS products. Now, what their plans are currently is that the IQOS e-vapor products will launch in more than 20 markets this year. The company aims to commercialize IQOS products in 100 markets by 2025, and that is up 64 from the end of 2020. So that is some huge growth. Now, this is the very last video I did release on this, so I'm not going to go into this one too in depth. If you do want access to this, definitely just go check out that last video. But again, that is another big aspect, because I did mention in that video, and I said, look, this means that in a sense where if they do win this lawsuit against them, not only are they going to be capitalizing on their growth, but that means that if they do come to some type of royalty settlement or royalty agreement, that will allow HCMC to have a product that they are receiving royalties or licensing fees from that is within 100 markets by 2025, which is absolutely huge for the company. Now, about 3 days ago, we did make a video that was going over the news that HCMC announces the sale of $5 million of preferred stock, convertible into common stock, initially at 150% premium to the company's most recent closing price. Now, one thing that we do have to acknowledge is the fact that since this entire thing did happen, we have really seen this company take off. But whenever we do think about this, what exactly was the main reason that we can think that this company would have done this, and what does it say for HCMC going into the future? Well, in the video that I did refer to all of this, I basically said that I believe that they did this raising as they are going to need a lot more capital going into this lawsuit against Philip Morris. Philip Morris is a company that is very well established. They have some amazing lawyers. They have a very large market cap. And this is not just going to be some easy lawsuit that is just going to fly under the rug. No, this is going to be a lawsuit that HCMC is going to have to battle. They are going to really have to put on the pressure, and they are going to have to do a lot of proving. Now, with the sale of $5 million of preferred stock, this is going to allow them to use some of this cash to continue their operations while also going on into this lawsuit. Now, we will take a look at some risks from the financials earlier, and it's going to make sense as to why I believe that this was so important, because I think that they needed this cash in order to maintain the pace in which they are at. Now, one other thing that I did believe that this really played a factor to, and I think it was really important, was the fact that this was done at a 150% premium to the company's most recent closing stock price. Now, at the time, the company's stock price was only at 0.0016, but this deal was done at 0.0024, which again represented 150% premium. So many of us did say that these institutional investors who are making these deals must have loads of faith that their stock price is going to fly past this. I literally said in the video, it's so insane. I literally said in the video, I would not be surprised to see this thing start to hit the 0.045 to the 0.005 mark, considering the fact that these institutional investors believe that it is going to surpass 0.024. And I think once we do break that we are going to see this thing run up to maybe about 0.0045 or 0.005. And the fact that we are literally sitting right at the top of what I called is absolutely insane. That was somewhat luck, but it was a pretty good guess, if I must say so myself. Now, what that does mean is that the institutional investors who did make this deal, they understand the hype behind this company. They really do also have faith that this company will see some long-term potential, and they wouldn't have been able to, put up this money and actually agree to this if they didn't think that they were going to get something out of it. So the fact that they do have that backing from these bigger institutions definitely does make me feel better about the outlook of this company in the long term and my own personal investment in them within the short and midterm. Now, just a quick refresher, in that video I did also remind you guys what convertible preferred stock is. Convertible preferred stock is going to be preferred shares that include an option for the holder to convert the shares into a fixed number of common shares after a predetermined date. Most convertible preferred stock is exchanged at a request of the shareholder, but sometimes there is a provision that allows the company or issuer to force conversion. The value of convertible stock is ultimately based on the performance of the common stock. So as we did see, the performance of the common stock was fantastic, but what this does mean is that the company can then convert those stocks into shares that they get them at 0.0024. So yeah, they did get them at a premium to the market at the time. They did pay a little bit extra at the time to be able to get these convertible shares, but now whenever you look back at it, that is a fantastic deal, and they really made some great money off of this overall transaction whenever we're talking about the institutional investors who did make it happen. Now, those are a lot of the great things that we do believe that are going to be behind this company. There are a few more, but they're not so big. I would say those are the biggest catalysts that we can see from the company in the short term and midterm. Now, I do want to take a look at a few different negatives that I think could, play their own factors. I would say the good does outweigh the bad, and I would say the risk versus the reward is a pretty great ratio at this point. But at the end of the day, it is always important to take a look at some of the risks. Now, again, me going over these risks is not me saying this is a bad company or there's anything like that, as I do personally have money invested into them. But like I said, it's important to know all of the risks that are associated with what you have invested your hard-earned money into. Now, one thing that I'm very nervous about whenever it does come to this company is the fact that we have seen them have issues with their financials in the past. Now, we'll go over that in a second here. I'm going to talk about it a little bit more in depth, but what I want to focus on is this overall lawsuit, as that is clearly the biggest short-term catalyst for this company. So whenever people are facing a patent infringement lawsuit, now we're going to be talking about Philip Morris here, there's a few ways that they can challenge the claim. Now, whenever they are challenged with the patent infringement claim, most infringers will respond with the same refrain. They're not infringing the patent, and the patent is not valid anyway. In fact, a common strategy by infringers is to challenge the validity of the patent, forcing the patent into re-examination by U.S. Patent and Trademark Office, and that process can take a year or longer. Now, we have to remember that these lawsuits are not cheap. The longer they have to pay for these lawyers, the longer they have to pay for these court dates, the longer they have to do all this is going to just cost more and more money. Now, of course, if this company does win this lawsuit, then they will make Philip Morris, more than likely, they will have Philip Morris pay all of the fees and everything that went into, the capital that they had to put into this in order for them to actually make this lawsuit happen. But the issue is that if they do not win this, that means they could have not only spent over potentially a year or longer having their patent re-examined, then they could also have burned through loads of cash trying to fight a lawsuit that end up not working out. Now, the issue with that is they've already struggled in the past with cash, and they've already struggled in the past with their financials. So if they were to lose this lawsuit, we could really see them dramatically lose a lot of investor interest, as their financials would probably not do so well, and then that would also cause a very strong dip in the stock price, which would also cause other investors to want to get out, and it would be very bad for the company, in my opinion. Now, whenever I am referring to some of their not so great financials, I'm referring more to what we did get reported from last year. Now, of course, last year was a very hard month for most companies, and so it is kind of hard to judge, but I do believe that there are companies who did manage to do well, and I would say this company was not, they weren't the best, they weren't the worst, they were somewhere right in the middle, but I would say overall their financials are definitely something to consider. consider. Right here it says that the company incurred a loss from operations of approximately $1.5 million for the 6 months ended June 30th of 2020. As of June 30th, cash and cash equivalents had totaled approximately $1.1 million, excluding a restricted cash of $2 million. While they anticipate that their current cash and cash equivalents to be generated from operations will be sufficient enough to meet their projected operating plans for the foreseeable future through a year and a day from the issuance of the consolidated financial statements, should they require additional funds, they have no commitments to obtain such additional financing, and they might not be able to obtain any such additional financing on terms favorable to us or them at all. So there's a few things associated with this one. Now, the reason that I did talk about this in the past was that I was saying that this could be an issue, because if they were to require additional funds, which they do now, they need additional funds for this lawsuit, they weren't sure if they were going to be able to obtain the financing. Now, the great thing is that after I did release that video is whenever this did come out about all of their, let's go back over here, that they did come to this preferred stock, the sale of $5 million of preferred stock. This came out, and I think that kind of somewhat countered all of this worry right here, because it did show that they were capable of getting some of these deals, and they were able to get some of the additional financing. And so that was definitely something that was beneficial to see, and it did ease a lot of my little worries about this company, as I wasn't sure. Okay, well, they said if they needed extra cash, they weren't sure if they were going to be able to get it. Well, now that they have proved that they were able to get it, it does give me a little bit more confidence knowing that my investment is more secure. So I would say those two things are really the only things that have worried me in the past with this company. This one honestly doesn't worry me all that much anymore, as they have showed that they are capable of raising cash through many different ways, and that is a fantastic aspect of this company, to say the least. Now, I also do believe that in the short term, that if they were to lose this lawsuit, that this is going to be very detrimental for the stock price. I'm not saying that they won't be able to return. I'm not saying that they won't be able to rebound. And I'm not saying that it would still be a long-term bad stock to own. But what I am saying is that a lot of this hype right now that is sitting around HCMC is revolving around this lawsuit. And if they were to lose this lawsuit, I really do believe that it would be a horrible, horrible dip that we would see in the stock price. Now, after everything I did talk about today, that could allow a lot of people to get in and capitalize on some of the future gains we could see from so much of this different growth in all of these different markets in which they're in. But at the end of the day, we do have to pay attention to what exactly the stock price is going to do, as it is moving very, very strongly on hype, as more and more people are starting to take notice of Healthier Choices Management Corp, ticker symbol HCMC. Well, I hope I did a pretty good job of reviewing these in a timely manner. I'm not 100% sure how long this video is, but I hope I didn't keep you all too long. Each one of these different articles was basically a new video, and I think I did an okay job of getting them all down into one. Now, if you did enjoy today's video, you can let me know by smashing that like button and subscribing to the channel if you are new. If you've invested into HCMC and you have other thoughts about this company, please leave them in the comment section, as that will help many other investors, and it also may bring ideas to me myself whenever it comes to putting these videos together. Now, with that being said, I do post on this channel 2 to 4 times every single day, and I can't wait to see you all next time. Peace.